icons, you will see that all the notes has also been uploaded on there. And also, there's also the past recordings. You can get that quite easily now. And we must thank the teams or the people that has worked to make that available for you students. So whenever you want to see any of these items, the recorded videos, or 6 lectures, you can just get it there under your recordings. Also, just go on to Teams. You will see that there is an icon next to the notes and the files that will speak about the recordings. And if you've got any technical issues, guys, please send it to ctintat@unisa.ac.za. And at the end of the lecture, guys, we will appreciate it if you can just complete the feedback form and please just forward that then to us.
Secondly, anyone in the medical aid must know that service medical aid. I don't trace it.
Okay, guys, let us get going. We've got a few students who I can see, so can I please just ask you just to go to your camera and just cancel that, please. Thank you. Right, guys, we are on to today's lecture, and I have, like I said, I have sent you the notes. So in today's lecture, guys, we are focusing on study unit number 16, which deals with non-profit entities. Study unit number 16, non-profit entities. Now, guys, when we are talking about non-profit entities, and please, guys, just please bear with us here. There's quite a lot of theory that I need to get through to get you guys an understanding of what is required under this section of the work. So, when we speak about non-profit entities and the books that you must do for a non-profit entity, we are referring to examples such as sport clubs, okay? Now, when we are referring to these sport clubs now, we are referring to the community-based sports clubs that you may have. Those sports clubs that you have in the community, guys, we are going to take a look at the books now of such a club. Now, when we talk about these community-based sport clubs, guys, it will be your local soccer club, or your local rugby club, or a chess club, or a book club. Now, these clubs that we do have, guys, these clubs are not like your Kaizer Chiefs or your Pirates. Here we are referring to clubs that is there just for recreational purposes, not to make a profit, but more to keep the community involved in a particular sport. So, just to go back to our slides now, guys, that we have there, we said there that the purpose of establishing a club is now for recreational purposes only, and we are referring to community clubs such as your soccer clubs, your book clubs, your tennis club that you will find in your community. Now, these clubs, guys, are administered by certain guys which are called the officials of the club, and we are also sometimes referred to them as the office bearers. Now, the office bearers of a normal club will consist of a chairperson. You will have a vice chairperson. There's normally a club secretary. There's normally a treasurer. And you may also have additional committee members, depending entirely on the size of such a club. The internal control and the management of a club is governed by a constitution. So each club will have a constitution. In the constitution, there will be information such as how much the members must pay, what is the club colors, when they participate, when does the season start, how many meetings they're going to have per month. But that is basically the information that will be in the constitution of the club that will govern the actual actions of the officials and the members of such a club. We as accountants, of course, is only interested in the treasurer's books. What is going on in the treasurer's books? Because that is the basis of our information that we need whenever we are going to do our financial statements. So the treasurer, which is our main focus point, is responsible to prepare financial statements and then also to submit those financial statements to the members and present it normally at a particular meeting. So when we talk about the financial statements of the club, it will consist of a statement of income and expenditure, very similar to a statement of profit and loss and other comprehensive income. But the statement of profit and loss and other comprehensive income is the financial statement of a trading concern. Now we talk about a non-profit entity, a club, and here the financial statement is called the statement of income and expenditure, where you must state the income for the year and you must state the expenses for the year. Now, guys, let us just take a look at some of the terminology that you need to understand, guys. Some of the terminology that you need to understand whenever we are doing club accounting. Remember, non-profit organizations is also sometimes referred to as club accounting. So some of the contents, guys, and some of the terminology, guys, that you need to understand under non-profit entities will be, let us first of all speak about equity. Now, you will recall that when we talk about a sole trader and we talk about equity, then we talk about the capital account of the owner. However, in a non-profit organization, the equity is called either the capital fund account or the accumulated fund account. So sometimes the question will refer to capital fund, or sometimes it will speak about the accumulated fund. And that is the equity of a club. When we talk about the financial statement, I alerted you guys earlier to the fact that when we speak about a financial statement, we are talking about the statement of income and expenditure. Now, in your income and expenditure, you draw up a statement of income and expenditure. And in your income and expenditure, guys, you will list now all the income for the year, all the expenses for the year. But when we speak about a trading concern, in a trading concern, we will also have our income and expenses. But then in your trading concern, when you prepare a statement of profit and loss and other comprehensive income, you calculate what is the profit or the loss for the year. In a club, we don't speak about a profit or a loss. If your income exceeds your expenses, then we call it a surplus. And if your expenses is more than your income, then we speak about a deficit. So we can either have a surplus or a deficit. In the case of a trading concern, we spoke about a profit or a loss. But now we are calling this now either a surplus or a deficit. And at the end of the financial year, once you have calculated what the surplus or the deficit is, you transfer that now to the capital fund account or to the accumulated fund account. Whatever surplus or deficit has been made for the year, you transfer that to your equity account. And the equity account in the case of a club is your capital fund account. Right. The next part of your terminology, guys, that you must understand is that we get some income that only pertains to clubs. And the first and the most important item that we do have here is membership fees. Membership fees, sometimes the question or textbooks will also refer to this as your subscriptions. Now, membership fees is the amount that is paid by members, and this is governed by the Constitution. So the Constitution will tell you what is the amount of the membership fees that must be paid, whether it's 1,000 Rand or 500 Rand or whatever the amount is that the member must pay. That amount that the member must pay to be a member of the club, we call that membership fees. It can be paid on a monthly, quarterly, or annual basis, but the Constitution will govern how much must be paid and when it must be paid. The next item that we do have, guys, under your income is your amount of entrance fees. Entrance fees. Now, entrance fees, guys, is the amount of money that a member must pay once he joins the club. It is a once-off amount. So he needs to pay that amount of money. And once he has paid that amount of money, that is the amount of money that is then called entrance fees. It's a once-off amount. Once you have paid that amount of money, now you are a member of the club. And thereafter, on an annual basis, you must pay membership fee to remain a member of the club. Importantly, guys, when we speak about entrance fees, the Constitution will tell you what must happen with the entrance fees. So we've got two options here. Sometimes the question will tell you that according to the Constitution of the club, the entrance fees must be capitalized. If your question tells you that the entrance fees must be capitalized, then the entire amount of the entrance fees must go to the capital fund account. You will regard your entrance fee then as equity. In another scenario, guys, in another scenario, your question may tell you that the Constitution says that the entrance fees must be regarded as income. If the Constitution determines that the entrance fees must now be regarded as income, you take the entire amount to the statement of income and expenditure, and you will treat your entrance fee then as income. The third scenario that you can get, guys, is that the Constitution may determine that a portion of the entrance fees must be capitalized, and the other portion, guys, once again, man, we get lots of interferences here, please. So can I please ask, I can't see who that person is with a baby there, but I will appreciate it if you can just mute your microphone for us, please. Just back to the third scenario here, guys, as far as our entrance fees is concerned. The Constitution may determine that a portion of your entrance fees must be capitalized and the other portion must be regarded as an income. If that is the case, if they say 50-50, 50%, then you take 50% of your entrance fees and you regard that then as you transfer that to your capital fund account, and the balance then, the other 50%, you then regard as income. So just to be clear, guys, on that now, when we speak about entrance fees is a once-off payment by new members. Portion of the entrance fees can be capitalized, and The balance can be regarded as income. The Constitution will guide you on that matter. Right, guys, we can also get certain expenses that we will only find with clubs, some expenses only with clubs. And some of those expenses, guys, you will get your normal expenses, electricity, and you must pay wages, and you must pay rent, and you must pay interest. But there are two expenses that you will only find with clubs, and let me just quickly explain that. The first one is affiliation fee. Affiliation fee. Now, affiliation fee, guys, is the amount of money that the club will pay to belong to a higher organization and also to participate in matches of that particular organization. Let me just explain to you guys by means of a simple example, and we take a look at Rugby South Africa. If we take a look at Rugby South Africa, guys, the Rugby South Africa or South African Rugby Union consists of different units. Okay, we get Western Province, and we get the Blue Bulls, and we get Gauteng Lions. Those are all people that form part of South African Rugby Union. They are affiliated to the South African Rugby Union. And in order to maintain their membership with the higher organization and to participate in matches for that particular organization, they must pay an amount of money. And that expense that they will incur, that expense is called affiliation fee. The second expense, guys, that you will only get with a club is called a honorarium. Honorarium. Now, a honorarium is an amount of money which the members will pay towards the officials of the club. So each of your officials, whether it is the treasurer or the chairman, for exceptional services that they have rendered during the course of the year, we pay them a small amount of money. It's not a salary as such, because, you know, these guys are perhaps they are employed somewhere else, but they are just doing this work now to see to it that there is community involvement. It is not a huge amount of money, guys. It is more a token of appreciation that we just pay them a small amount of money. And that expense, guys, is called a honorarium. So just, guys, to summarize quickly what we are doing now, is that I'm just going through some of the expenses and the income that you will only get with a club. Some of the expenses that you will get only with clubs, affiliation fee, and you get also a honorarium. Now, guys, the next item that we must talk about is, in any club, guys, we are going to have some fundraising efforts. In your smaller clubs, guys, sometimes there's a dance where the members will sell tickets, okay? Or we will sell tracksuits, or we will sell t-shirts. So when you draw up your income and expenditure statement, you will have to show what is the profit on the dance. And the profit on the dance will be the income from the dance minus the expenses. If we are selling tracksuits, we just show what is the profit on the tracksuits. That is what you show in your statement of income and expenditure. However, some bigger clubs, guys, may have a tuck shop, or they will have a bar, or they will sell refreshments. If that is the case, guys, you must also indicate what was the profit on the tuck shop, what was the profit that was made on the bar, and what was the profit on the sale of refreshments if we are having refreshments. Now, when we talk about the bar, or we talk about refreshments, or we talk about the tuck shop, the question will sometimes require you to do a trading statement. So in your trading statement, you are basically just going to calculate what is the profit on those items. What is the profit that you've made at the bar? Or what is the profit that you have made on the sale of your refreshments? To calculate what is the profit, you apply the same principles in terms of when we've had our sole trader. How do we calculate our profits? Profits is equal to the revenue minus your cost of sales. So you take a look at your bar. What was your bar sales? What is your bar expenses? And that will give you the profit on the bar. To calculate the gross profit on the bar, guys, you know the story. It's revenue minus cost of sales. And to calculate cost of sales is still equal to your opening inventory plus your purchases plus your closing inventory. Okay, guys, that will give you the profit on the bar, or profit on refreshments, or profit on your tuck shop. You apply the same principles here. Right, guys, that will take care of some of the theory that you need to know as far as non-profit entities is concerned. I'm referring to you guys now to our notes now. Let us just turn our attentions, guys, to the notes that has been sent to you. It's called Lecture 11, the notes there on club accounting. When we talk about the notes here, guys, I've explained to you here already. I just want to emphasize a few more things. We've got financial statements. Financial statement of a club consists of your income and expenditure statement and your statement of financial position. In your statement of income and expenditure, you must calculate either the surplus or the deficit. And in your statement of financial position, you just show all your assets, all your equity, all your liabilities, and in the end, assets is equal to your owner's equity plus your liabilities. If they give you a question on club accounting, guys, and they ask you to complete the statement of income and expenditure and the statement of financial position, we will still work with the same adjustments as what we had in the case of a sole trader. So you will still have your prepaid expenses and your accrued expenses and your accrued income and income received in advance you may have, and depreciation and some credit losses. That will be when some of the members cannot pay their accounts. We call that then credit losses or membership fees written off. Next, guys, we need to focus on our membership fee account. This is quite a popular exam question, guys, and you need to familiarize yourself then with how to draw up a membership fee account. I'm going to take you through the process here, guys, and then I'm going to explain to you how we get down to the membership fee account. Under A, guys, we need to do the reversals. We need to do the reversals. Let me just explain that concept to you guys in terms of your reversals. You know, as far as income is concerned, remember now, membership fee is an income account. So the adjustments that will impact on membership fees will be accrued income and income received in advance. Now, at the end of the financial year, if you have still got members that is owing you membership fee, we call that accrued income. And accrued income is an asset, which means that in your journal, if you are going to record the adjustment, You will debit accrued income and you credit your account membership fees. But that entry, which you put through on the last day of the financial year, that entry you just put in to your account, guys, so that you record that entry, guys, in the books of the business so that you can prepare your financial statements. On the first day of the financial year, you cancel whatever you have put through on the last day of the financial year. You basically cancel the adjustment that you have put through. So, at the end of the financial year, if you must make provision for your accrued income, you will debit accrued income. And on the first day of the financial year, you cancel your accrued income by crediting your accrued income. Okay, guys? That is just the principle, which is perhaps quite difficult for many students to understand. So I'm not going to elaborate a lot on that, guys. But just back to our notes now. I have just explained to you now why we need to cancel your reversals, guys, or your adjustments. It comes down to the fact that the adjustments that you have put through on the last day of the financial year, you cancel them on the first day of the financial year. So we say, under step A, you need to reverse or you cancel your adjustments for accrued income and income received in advance that were recorded on the last day of the previous financial year. Those entries must be cancelled. Go to your membership fee account, guys. At the bottom of page 1, I've given you an example of that. So in your membership fee account, on the 1st of January, the first day of the financial year, you cancel the accrued income from the previous year by debiting the membership fee account with accrued income, and on the 1st of January, you credit the membership fee account here with income received in advance. So under step A, guys, you need to do the reversals. In step number 2 now, guys, now you go to your list of accounts, or sometimes in a question, they will give you something that is called a statement of receipts and payments. In your statement of receipts and payments, they will now tell you what is the amount of membership fees that were received for the year. To record that in your membership fee account, you credit the membership fee account and you will debit the bank account. Remember, you are receiving money, so you will debit the bank account and your membership fee account will have a credit entry bank. Okay. I'm going on to my step number C now. And in step number C, now we need to bring into account your adjustments at the end of the year. Your adjustments at the end of the year. You are looking for 3 adjustments now. You are looking for income received in advance. Income received in advance will refer to the members that has paid their membership fee for the following year during this year. So if you are working for the year 2019, it is possible that some of the members has already paid their membership fee for 2020. You call that income received in advance. Income received in advance is listed as a liability. You credit income received in advance and you debit the membership fee account. So the membership fee account will have a debit entry for income received in advance. Second adjustment, at the end of the financial year, you will get accrued income. Accrued income is an asset. You debit accrued income and you credit the membership fee account here with accrued income. Okay. The third adjustment that you can get is membership fees written off. Membership fees written off is an expense. You debit your account membership fees written off or credit losses, and you credit the membership fee account here with membership fees written off. So at the end of the financial year, guys, there are 3 adjustments that you must take into account. Income received in advance, accrued income, and membership fees written off. Okay. The membership fee account is now closed off. Remember now, the membership fee account, you have now calculated what is the income for the year by taking into account all the adjustments. Adjustments, there are 5 of them. 2 coming from step number A, where we had to reverse certain or the previous year's adjustments, and 3 adjustments for the current financial year, which will be income received in advance, accrued income, and the membership fees written off. Now, after you have taken into account all of those adjustments, you close off now the membership fee account to the income and expenditure account. This is the difference between the debit side and the credit side, and this is the actual income for membership fees after all the adjustments has been accounted for. Okay, after all of the adjustments has been accounted for, guys, that will be then the amount of the membership fees. Guys, what we've covered today so far is quite a lot of theory and also a lot of some difficult calculations. So at this stage, guys, I'm just opening up, guys, for 2 questions, please. Anybody with a question?
So the
Okay.
the calculated brought forward income and expenditure account, is that what goes into our statement of income and expenditure, or does the membership fees go into that statement?
Okay. Right. Let me just quickly answer that one. The amount, and I will give you now an example of a membership fee account. The amount that is closed off to the income and expenditure account, that is the actual income for the year, and that is the amount that is transferred to the income and expenditure statement. Okay, so you are correct in saying that that balancing figure that you will have here, there, that is the amount that appears as income in your income and expenditure statement. Okay, another question, guys? It looks like everybody has got this under control, or let us just first work through a question, and then I will give you an opportunity, guys, to take a look at or ask some more questions. Right, guys, so back to our notes now, guys. I've explained to you now, guys, the membership fee account. We are taking a look at an example here, guys, the May-June 2018 paper. It's a business called Happy Kids Tennis Club. Happy Kids Tennis Club. And if we go, guys, just go for me to what I've got there for you guys as the workings there. The workings of this particular question. On the second page, guys, your approach to the question. You go to your required at the end of the question. The question wants you to complete ledger account. They ask you to do the membership fee ledger account. And also they ask you to do a trading statement. And then the question wants you to do the statement of income and expenditure. So our approach will be the following. We're going to take a look at our adjustments. We're going to work through the adjustments. We're going to bring about the changes on our list of accounts. And from that information, we are now going to complete our financial statement. Right. So the question has given you guys a list of accounts there. The Happy Kids Tennis Club, they give you a list of balances on the 31st of December 2016. And as you can see there, guys, accumulated fund. Just remember that when we speak about the accumulated fund is nothing else but your equity account. Okay? Sometimes they will also call that capital fund. Okay. So you've got accumulated fund and equipment and accumulated depreciation. There's a loan, there's a bank, there's inventory of tennis balls. Inventory of tennis balls say that at the beginning of the financial year, that was the value of the tennis balls that was left there. Okay, we will start the year with that value of tennis balls. We've got a fixed deposit. We've got entrance fees, there's bank charges, there's donation, repairs, wages, rent expense, tennis balls purchase, interest on loan, affiliation fee, honorarium, interest on fixed deposit, stationery, membership fees received, and then they will tell you as far as your refreshments is concerned, at the beginning of the year, the 31st of December 2015, there was 500 rands worth of refreshments, purchases. We bought refreshments for 5,440. Sales, that is the sales of refreshments. We sold refreshments for 8,000 rand. And at the end of the financial year, we have still got 1,000 rand left of our inventory. Just remember here, guys, we just bold that for you quickly so that you can see that the last 4 items here all pertains to refreshments. Okay, they give you the opening balance of refreshments, the purchases of refreshments, the sale of refreshments, and the inventory on your refreshments at the end of the year. Right, guys, we are going through our adjustments now. And the first adjustment that you will see there is telling you that the entrance fees must be capitalized. Now, remember, guys, in my discussion on when I did the theory on this, guys, I had a discussion on your entrance fees. Remember, you can have 3 scenarios here with entrance fees. Sometimes entrance fees must be capitalized. That means the entire amount of entrance fees must go and be treated as equity. Or sometimes they tell you the Constitution determines that entrance fees is regarded as income. Then you take the entire amount of entrance fees and you put that now into your statement of income and expenditure. However, third scenario, sometimes they tell you a certain percentage of your entrance fees must be capitalized and the balance must be regarded as income. Then you will do the split. Take a portion then to the income and expenditure account and a portion to the statement of financial position under capital fund. In our question over here, guys, entrance fees must be capitalized. Therefore, the entire amount of the entrance fees must now be transferred to the accumulated fund account, and if you go to your list of accounts there, guys, you will see that your entrance fees is the amount of 1,500 rand. 1,500 rand must be capitalized. 1,500 rand must be added to your accumulated fund balance. Therefore, it must be, you will show this now in your statement of financial position, because accumulated fund is equity. It goes to your statement of financial position. Right, guys, 2.2. 2.2 deals with your membership fees. The membership fees were 100 Rand in 2015. That is 100 Rand per member. 120 Rand in 2016. And in 2017, you are going to pay a membership fee then, guys, of 140 Rand. So that is just to maintain your membership fee in the club, guys. That is not an adjustment as such. That is more just information on our that we will use now whenever we do our calculations. 2.3. 2.3 tells you that on the 1st of January 2016, the membership fees of 5 members were still due. This is now at the beginning of the financial year. And at the beginning of the year, we have seen now that 5 members didn't pay their 2015 membership fee. So at the start of the financial year, this will be our accrued income. Members that still owed us the money from the previous financial year. And our accrued income then for our membership will be the amount of 500 Rand. Because remember, the information under 2.2 tells you that the membership fees for 2015, in 2015, the members had to pay 100 Rand. So if 5 members did not pay their 2015 membership fee, then that will lead to accrued income of 500 Rand. In adjustment 2.4, they tell you that an amount of 720 was prepaid by the members on the 31st of December 2015. The 31st of December 2015 is the last day of the previous financial year. So once again, this will refer to the beginning of the year. And at the beginning of the year, we will now have income received in advance. And the income received in advance now at the beginning of the year is given to us now as 720 Rand. Income received in advance. Right, guys? The next adjustment that we are dealing with is adjustment 2.5. Adjustment 2.5. On the 31st of December 2016, 4 members paid already their membership fees for 2017. Now, the 31st of December 2016 is the end of the financial year. And at the end of the financial year, 4 members has already paid their membership fees for 2017. So that is called income received in advance, because you received the money already for the 2017 period. You have received that money during 2016. We call that income received in advance. And 4 members has paid that. Go to your information now. under 2.2, when we are talking about the 2017 membership fee, guys, you will recall that the information is that in 2017, a member must pay 140 Rand per member. So if you are going to do the calculation now, 140 Rand per member, we have got 4 members that must pay us, and therefore the income received in advance at the end of the year is 560 Rand. 560 Rand, guys. That is the income received in advance at the end of the year. As you can see here, guys, I distinguish between the beginning of the financial year, and then I will have at the end of the financial year. Just going through all the information that will pertain to our membership fees. The next item, guys, I am on to 2.6. The membership fees received during 2016, which is included in the membership fees that we received during 2016. Now, when they talk about the membership fees that they received during 2016, guys, they are referring to the 18,720 that you will get in your list of accounts. Because in the list of accounts, they will tell you that during the course of the year, membership fees received is the amount of 18,720. Back to our adjustment. Membership fees received during 2016 included the membership fees of 3 members who did not pay in 2015. Link this now, guys, to at the beginning of the year. When the year started, 5 members didn't pay their membership fees for 2015. Now, of that 5 members now, 3 of them paid. 3 of them paid their 2015 membership fees during 2016. So the other 2 that didn't pay their membership fees, we will write that membership fees now off as irrecoverable. It is regarded as an expense to the business now. Club will now have an expense. We call this expense now membership fees written off. Okay, some textbooks also refer to this as your credit losses. And remember, in 2015, the membership fees was 100 Rand per member. So 2 members, we are going to write off their accounts, and that is the amount of 200 Rand. Okay. Remember, they are also now not members of the club anymore. We will write off their accounts as irrecoverable, and they will not share in the benefits of being a member of this club anymore. The next adjustment, guys, adjustment 2.7, also deals with membership fees. On the 31st of December, 3 members' membership fee for 2016 was still outstanding. So 3 members didn't pay their membership fees for 2016. This is now at the end of the year. And at the end of the year, now we say we have got 3 members that must still pay their membership fees. That is regarded as accrued income. That is accrued income. And your accrued income will consist now of the 3 members that didn't pay, And the membership fee for the current year is 120 Rand per member. You get that information under your 2.2, and therefore we will have now accrued income of 360 Rand. So guys, as far as 2.2 is concerned, from 2.2 till 2.7, that information all dealt with the membership fees. Right. I have indicated to you now the calculations and the amounts applicable. I am now going to go over, guys, and I'm going to do the first part of the question where they ask you now to do the membership fee account. So guys, if I'm now going to do the membership fee account, follow the steps that I've got here for you guys under the membership fees, how to do the membership fee account. At the beginning of the financial year, guys, the 1st of January, you will have to reverse or cancel the adjustments that you have put through on the last day of the financial year. So your membership fee account, guys, will debit with your accrued income. And at the beginning of the financial year, guys, the accrued income was 500 Rand. That information is under 2.3. We work it out under 2.3 and the amount is 500 Rand. Also on the 1st of January, guys, we will have our income received in advance at the beginning of the financial year. And at the start of the financial year, guys, we have calculated that income received in advance was the amount of 720 Rand. And that amount of 720 Rand, guys, that information of the 720 Rand, you will find under 2.4. We discussed that, guys, under 2.4. So, as far as the completion of my membership fees account is concerned, guys, remember I'd given you the steps there. Step number 1, first cancel the adjustments at the beginning of the financial year. We call that the reversals of the previous year's adjustments. Accrued income, income received in advance must be cancelled or reversed. In your next step now, on the 31st of December, now you must have a look at what is the total amount of membership fees received. So go to your list of accounts, and the membership fees received is the amount of 18,720. So in your membership fees account, you have debited the bank account and you credit your membership fee account with your bank, and the amount is 18,720. That was my step number 2 that I've got for you in your notes. In step number 3, you bring into account your adjustments at the end of the year. Bring into account your adjustments at the end of the year. You are looking for 3 adjustments at the end of the year. The 3 adjustments that you will get at the end of the year is accrued income, income received in advance, and membership fees written off. Right. back to our information that we've worked out already. At the end of the year, under 2.5, there was income received in advance. Income received in advance is a liability, must be credited. Credit income received in advance. We debit our membership fee account now with funds. And we will see that the income received in advance then, income received in advance is the amount of 560 Rand. As we have calculated that amount then, guys, the 560 Rand for income received in advance, we have calculated that under 2.5. 2.6, guys, just go back to what we've worked out under 2.6. Under 2.6, we said that there was membership fees written off of 200 Rand. So membership fees written off is an expense. I debit my account membership fees written off. I credit my membership fee account with an account called membership fees. Membership fees written off. And your membership fees written off, remember that was the 2 members of 200 Rand. And lastly, guys, now at the end of the financial year, we are looking for accrued income at the end of the financial year. Accrued income is an asset. Debit accrued income. Credit your membership fee account here with accrued income. And your accrued income at the end of the year, we have calculated that under 2.7, at the end of the year, we had accrued income of 360 Rand. Accrued income is now 360 Rand. So guys, as far as my membership fees account is concerned, remember I've explained to you the 4 steps. First, bring into account your reversals at the beginning of the year. Bring into account the bank amount, which you will recall is how much did you receive during the course of the year. Then you look for the 3 adjustments at the end of the year. There is an adjustment for income received in advance. There's an adjustment for accrued income. And there is an adjustment for membership fees written off. Bring that all into account, guys. The balancing amount is the actual amount of membership fees received for the year after all the adjustments has been taken into account. The membership fee account you close off now to the income and expenditure account. Income and expenditure account. And the amount to be recorded in your income and expenditure account now, guys, is the balancing figure. So what you do is, just quickly get rid of some of these things here. You add up your credit side now, which is the 720 plus the 18,720 plus the 200 plus the 360, and that will give you an amount of 20,000 rand. On the debit side, you record the 20,000 rand, and the balancing figure to be recorded now in your income and expenditure statement as your income is the amount of 18,940, which is the balancing figure now in your membership fee account. So if you are now going to do your income and expenditure statement, is to come back to a question that was asked earlier, you will now have membership fee as an income, and your income from your membership fees must now be 18,940. And many students tend to forget this one, but remember now, you have also got an expense called membership fees and off. And our expense for membership fees written off was an amount of 200 rand. And that will take care, guys, of all the adjustments and the impact of the adjustments from 2.2 down to 2.7, all the adjustments that dealt with the membership fees. Okay, and I've also showed you now how to complete your membership fees account and how to transfer the amounts from the membership fee account straight into your income and expenditure statement. I will open up now once again, guys, for 2 questions on the membership fees account and for the adjustments from 2.2 to 2.7.
Sir?
Is that Leonie?
Yes. Can you just show the income and expenditure part again, please? I just need to write that down.
The income and expenditure statement?
Yeah. Yeah, thank you.
Okay. In your income and expenditure statement, you will transfer now to the membership fee account or to the income and expenditure the income from membership fees as 18,940 and an expense for membership fees written off of 200 rand.
So the date of that account is the year.
Okay. Can I just get that question again?
Looks like the
Are you okay,
financial.
sir? You had a question?
No,
I'm listening.
let him go first, sir. I'll go after him. Can you
I
hear me?
didn't get that. Yes. Okay. Okay, sir. Go ahead, please.
No, sir. I was asking. So, in this scenario, we had at the end of the year we had a surplus on the end of the year of 18,940 rand for membership fees.
No. Okay. No. That is not your surplus, eh? That is
Okay.
your income. That is your surplus. Is your final answer.
Okay.
After
Okay.
you've
So
taken into account all the income and all the expenses.
Okay, sir. And
the income from membership fees, that was determined in the membership fee account, and that we transferred as an income to the statement.
okay. The other question, sir, is what if that had to be on the 18,000, for example, had to be on the debit, on the credit side?
Okay, it can never be on the credit side. It is income.
Okay, so it can never be on the credit side.
It can never be on the credit side.
Okay,
Okay,
thank you,
only
sir.
expenses. If it was an expense, then it can go on the credit side, but not an income.
No, okay, thank you, sir.
Okay. Right, guys, we continue then. If there are no further questions, we are continuing, guys, and I am still going through my adjustments. Remember now, I have just finished off the adjustments there until 2.7, and I just wanted to show you how all of those adjustments will impact on your membership fee account. Right, guys. I hope you also realize that this session is a little bit longer because some of you guys has requested some more time onto these sessions. And then also, guys, I'm sure you guys realize that this is my last session that I will deal with you guys. So you should now be ready to go write your exams now. Right, guys, our next adjustment, we turn our attention now to 2.8. Take a look at our adjustment under 2.8. Adjustment under 2.8, the guys tells you that your inventory on hand at the end of the year, you have still got tennis balls on hand of 960 Rand. Now this tennis balls on hand, guys, will now impact on our tennis balls account. And this is now the value of my tennis balls at the end of the year. Go to your list of accounts now, guys. And let us take a look at tennis balls. Now the tennis balls that we purchased is an amount of 900 Rand. But just further up there, guys, they will tell you that you started the year with tennis balls of 2,500 Rand. So if you want to calculate what is your tennis balls expense, then you will say you started the year with tennis balls of 2,500. On that tennis balls, you then purchased another 900 Rand. And at the end of the financial year, you have still got tennis balls then on hand. And your tennis balls that you have got on hand, as per adjustment number 2.6, is then the amount of 960 Rand. So if you are going to do your statement of income and expenditure, you will have, and you must show the expense for tennis balls. It will be 2,500 plus the 900 minus the 960 Rand. Okay, that is then your amount of tennis balls. The other account involved here is that at the end of the year, you will now have inventory of 960 Rand. So remember, guys, this is just a normal adjustment. At the end of the year, you have still got like some consumable items left. In the case of a sole trader, we discussed this under stationery or packing material, consumable items that you may still have left at the end of the year. And in this case, at the end of the year, you have still got tennis balls left here, guys, of 960 Rand. The account involved is inventory, 960, and tennis balls must decrease by 960. Okay, guys? That is the impact of adjustment 2.8. Right. We take a look at the information under 2.9 now, guys. 2.9. 2.9, they tell you that Happy Kids Tennis Club bought 9 new tennis balls machines, and they bought that now on the 1st of July 2016. Now, for a tennis club, when you are buying a tennis ball machine, that will be regarded as your equipment. And that equipment was purchased then, guys, on the 1st of July 2016. Just go back, guys, to your list of accounts and have a look at your equipment there. And you will see that your equipment is an amount of 42,000 Rand. Equipment is 42,000 Rand. Your adjustment tells you that during the course of the year, on the 1st of July 2016, you bought equipment for 10,000 Rand. So you need to interpret this question as follows, guys. You need to say that your equipment of 42,000 Rand consists actually of new equipment that was purchased for 10,000 Rand, as well as old equipment of 32,000 Rand. We need that calculation when we are going to do the depreciation. So during the course of the year, we bought equipment for 10,000 Rand. The balance at the end of the year is 42,000 Rand. Therefore, we started the year with equipment of 32,000. You need to understand that that is your balance at the end of the financial year. So we continue now, guys. Under 2.9, we are saying equipment was purchased during the year. So under 2.10, if I am going to make provision for depreciation, and my depreciation is provided for at 10% per annum on the diminishing balance method, if I am going to calculate my depreciation expense, guys, I will say to calculate depreciation, I have got some old equipment. And to calculate the depreciation on the old equipment on the diminishing balance method. Diminishing balance method means first calculate what is your carrying value. And your carrying value is cost minus accumulated depreciation. Your cost is the amount of 32,000 Rand. 32,000 Rand, that's the cost of your old stuff. And your accumulated depreciation is the amount of 6,080. So to calculate depreciation on the old stuff, it will be 32,000 minus 6,080. Cost minus accumulated depreciation. And that will give you a carrying value of 25,920. So if I am going to calculate my depreciation, my depreciation will therefore be 25,920 at your 10%. And that will give you depreciation then of 2,592. That will then be your depreciation. But that is the depreciation on your old equipment. We have established that we also purchased new equipment during the course of the year. And if you want to calculate the depreciation on the new equipment, it will be equal to 10,000 Rand at 10% per annum. But this was purchased on the 1st of July. The 1st of July. Therefore, it must only be depreciated for 6 months, giving you an amount of depreciation on our new equipment of 500 Rand. So if I want to know what is my total depreciation expense for the year, it would be the depreciation on the old equipment of 2,592 Rand plus on the new equipment of 500 Rand, and therefore my depreciation expense is the amount of 3,092, 3092. So back to the list of accounts now. If I'm going to update my list of accounts under my nominal, I've got a new expense called depreciation. And my depreciation expense, therefore, I have calculated to be 3,092. The other account affected will be accumulated depreciation. And your accumulated depreciation will have to increase by the amount of 3,092. Guys? And that will take care, guys, of the adjustment for depreciation under adjustment 2.10. So under 2.10, guys, we had to make provision for depreciation. Do the calculation. In this case, it is on the diminishing balance method, which means that you must first calculate your carrying value and then you apply the percentage. Your depreciation, guys, your equipment consisted of old equipment and new equipment. Do the calculation there, and that will then be your expense for depreciation. Right, guys, I'm on to my next adjustment, which is adjustment 2.11. Adjustment 2.11. Mr. B. Summers, a retired tennis coach, has lent the tennis club 8,000 Rand on the 1st of January 2015, okay, and at an interest rate of 12% per annum. The 1st of January 2015, guys, was the start of the previous financial year. But we only account for expenses in the current financial year. So go to your account now, interest on loan. Your interest on loan for the year, and if you go to your list of accounts, you will see that there is a loan account of 8,000 Rand. And also in your list of accounts, you will see there's an account called interest on loan, 640 Rand. This means that we have paid already 640 Rand in interest on the loans. So go back to your adjustment now. And let us now do our calculation. The loan is an amount of 8,000 Rand. So interest on the loan, we want to calculate how much must we pay. To calculate the interest on the loan, it will be an amount of 8,000 Rand, and we must pay 12% per annum for the year. That means that we are supposed to pay 960 rand in interest. That is what we are supposed to pay for the year. 960 rand. However, if you go back to your list of accounts, you will see that you have paid already 340 rand has been paid. So you're still owing an amount of 320 rand. You are still owing on this interest. And this will be classified as accrued expenses. You didn't pay your accrued expenses, and your accrued expenses is the amount of 320 rand. So if you account for that now in your list of accounts, now, interest on loan will have to increase now by 320 rand. And under your financial position accounts, you will now have a new account called accrued expenses. And your accrued expenses is the amount of 320 rand. Okay? So guys, just to summarize that adjustment over there, we are supposed to pay interest for the year. We have worked out that we must pay 960 rand in interest. We have paid already 640 rand, so we still owe another 320. And that 320 that we still owe, that we did not pay, that is what we will call accrued expenses. Okay, guys. Next adjustment, 2.12. 2.12, guys. On the 1st of April 2016, which is during this financial year, Happy Kids Club made a fixed deposit of 40,000 rand at an interest rate of 10% per annum. So guys, we have made a fixed deposit. We are entitled to interest on our fixed deposit. On fixed deposit. Interest on fixed deposit, remember guys, is an income to the business. We have made a 40,000 rand investment. We must get interest at 10% per annum. The investment was made on the 1st of April, guys. Therefore, we are only supposed to receive interest for a period of 9 months. Only for 9 months. And therefore, the interest that we are supposed to receive interest then, guys, for 3,000 rand. Go back to your list of accounts to see if you have received anything already. And you will see that there's an interest on fixed deposit showing an amount of 2,000 rand. So of the interest on fixed deposit, guys, we're supposed to receive 3,000 rand. We have only received an amount of 2,000 rand. That is why there is still 1,000 rand outstanding. That 1,000 rand that is still due to us will be classified as accrued income. Remember, we are dealing with an income account. We have not received that amount of money as yet. It's still due to us. Income is an asset, money due to us. And your accrued income is the amount of 1,000 rand. To update your trial balance or your list of accounts, remember now, interest on fixed deposit must increase. And we will now work with a new financial position account And that financial position account is now called accrued income. And our accrued income is the amount of 1,000 rand. Right? Guys, all clear on that adjustment? We are entitled to interest on fixed deposit. We are entitled to 3,000 rand. We have only received 2,000 rand, and therefore we will have accrued income classified as an asset of 1,000 rand. 213, guys, 213. Mr. B. Peters's wages of 1,500 rand. Wages of 1,500 rand for December must still be paid. So we must still pay this amount of wages, and that will fall under the category of accrued expenses. And our accrued expenses is the amount of 1,500 rand. Update your trial balance quickly or your list of accounts. And in your list of accounts, we will now have accrued expenses. Remember, we had accrued expenses already. Accrued expenses, that 320 rand was due to the interest on loan that was not paid. Now we will have more accrued expenses. A further 1,500 rand is now accrued expenses. And the other account affected here, guys, will be our wages account. Go now to wages. The wages account, during the course of the year, we paid already 12,400 rand, but now we have got a further expense here that will increase your wages with the amount of 1,500. So my wages will increase by a further 1,500 rand. Okay, guys, so that will take care of that adjustment. Adjustment 213. Account for wages and account for accrued expenses. We take a look now at the last adjustment, guys, 214. 214. Happy Kids Tennis Club rent the tennis courts from Midrand Country Club at an amount of 500 rand per month. 500 rand per month, guys. This is rent expense. So when you are going to deal now with your account called rent expense, you are supposed to pay rent expense now of 1,000. Now the amount is 500 rand for the 12-month period, and that will give you a rent expense amount then, guys, of 6,000 rand. That is what we are supposed to pay, guys, for the entire year. Go back to our list of accounts. And your rent expense here, guys, is an amount of 5,000 rand. We have now established that we are supposed to pay 6,000 rand. So there is 1,000 rand that is not paid. Therefore, your rent expense will increase with a further 1,000 rand. Rent expense must increase with 1,000 rand. The two accounts affected will be rent expense, and the other account is accrued expenses. So we are having more accrued expenses here. There is another 1,000 rand of accrued expenses. So my accrued expenses will consist of the 320. That was for the interest on loan. 1,500 rand for wages and 1,000 rand then, guys, for our rental expense. So the two accounts affected there, guys, by that last adjustment will then be accrued expenses and rent expense of 1,000 rand. Okay, guys, I have now updated. I've taken into account all my adjustments I have updated now my list of accounts. And now I am going to go into the last now, where I am now actually going to do my statement of financial, or my statement of income and expenditure. Okay, guys. At this stage now, guys, are there any questions up to this stage? Any questions that you've got on the adjustments as such?
Sorry, sir.
Yes, I'm listening.
Can we go back to transaction where we purchased the tennis balls, which is transaction 2.8, adjustment 2.8? Okay.
Yeah, okay.
We had at the beginning we had the tennis balls, which was purchased on our side, that amounted to 2,500 rand.
Yeah, that was purchased last year already.
Last year, so it was carried over to the following year. So now
That's correct.
my question is, but during the year we purchased and we made another purchase for 900 rand.
All good.
900 rand was purchased.
That's
and
correct.
then we had left off of 960 rand.
That's correct.
So now when I look at your adjustment, you said minus 960 rand. Shouldn't we say 2,500 plus 900 rand minus 960? Can you
That is
explain to
still
me?
correct, sir. Just, but what I'm saying is that I am bringing into account the adjustment at the end of the year. And at
Okay.
the end of the year, you must subtract 960. So, okay, so let me just quickly explain to you what I've done over there. If you go to the list of accounts, as you correctly indicate here, if I want to calculate what is my tennis balls expense, it is 2,500 that I started the year with, plus the 900 that was purchased during the course of the year, minus the 960 at the end of the year. So the adjustment that we are dealing with now is the minus 960. I don't know whether that is clear to you.
Yes, sir, it's clear. It's clear to me. So we need to take into the amount that we are adjusting at the end of the year, which is a 960.
At the end of the year, you've got inventory on hand.
And
the journal entry to account for that is you debit your account inventory and you credit, you decrease your tennis balls.
Okay, thank you, sir.
Okay, any other questions, guys? Any queries at this stage? Okay. Can't believe it, but it looks like all of you guys has got this under control. So let us then take a look, guys, at the last part now of the question, or the second part. The question actually consisted of 3 sections. So I am going to go into the second part of the question. Remember, I've done the first part already of the question. The first part of the question was to complete the membership fee account. Right, so I remember all the adjustments from 2.2 right down to 2.7. We needed that now to complete our membership fee account. The second part of the question, guys, is where they ask you to do the trading statement for refreshments. Now, guys, as far as this is concerned, remember now, it can be refreshments, it can be a bar, it can be a tuck shop, it can be anything. You do it all on the same basis. The purpose of drawing up this trading statement for refreshments is to calculate what is the profit that was made on the sale of our refreshments. So the profit on the sale of the refreshments will be go to the revenue of our refreshments, go to the revenue of our refreshments, in your list of accounts, go to your list of accounts, and the revenue on our refreshments your revenue, your sales of your refreshments, second from the bottom, was an amount of 8,000 Rand. So revenue on the refreshments is the amount of 800 Rand. 8,000 Rand, sorry. 8,000 Rand. And then, of course, now you must now just guys, calculate now. Once you've got your revenue, you must have your cost of sales. To calculate the cost of sales of your refreshments, you know the story, guys. It is the opening inventory of refreshments. To that, we are going to add our purchases. And we must check our closing inventory. All that information is right at the bottom there, guys, of your list of accounts. The inventory at the start of the financial year, we started off there, guys, with 500 Rands worth of inventory. The purchases of inventory is the amount of 5,440 minus the closing inventory, which is the inventory on the 31st of December 2016 of 1,000 Rand. Just block that there to get our amount of cost of sales, which is the 500 plus the 5,440 minus the 1,000 Rand, and that will give you cost of sales of 4,940. 4,940, and we will now have the gross profit on our refreshments, and our gross profit on our refreshments then is the amount of 3,060. 3,060, which is revenue minus the cost of sales, and that will give you the gross profit then of 3,060. Right, guys, refreshments is what I've explained to you guys earlier in the notes as one of those fundraising efforts which the club may have. So whether they are selling tracksuits or t-shirts or refreshments or wine at the bar, whatever the question would want you to do, guys, and the information in the question, take that information in the question, guys, and you will then come up with those amounts. And those amounts that you will see there, guys, for revenue minus the cost of sales, that will give you the gross profit. Whether it's a bar or whether it is a tuck shop or whether it's refreshments, it will come down to exactly the same thing, guys. Right. The calculation will always be the same. Take your revenue minus your cost of sales, and that will give you your amount of the profit for the year on the refreshments in this case. So the last part of the question, guys, I am now going to do my statement of income and expenditure. So in my income and expenditure statement now, guys, I'm going to bring now into account all my items that I will have now in my list of accounts. So under income, I will now have the profit on the sale of my refreshments. I will indicate that now. And the profit on the sale of the refreshments, we have calculated now to be 3,060. 3,060. That is the profit on the sale of our refreshments. Right, guys, back to our list of accounts now. Back to our list of accounts. And we are now going to work with the updated amounts that we will see there. Remember now, accumulated fund, accumulate your equipment, your accumulated depreciation, the loan, the bank, tennis balls we've written off already, our fixed deposit, all of those items will go into your statement of financial position. For the income and expenditure statement, we are going to work just with our income and our expenses, and we will go and start here from entrance fees downwards now. That is our income. But entrance fees, as you guys can recall, under adjustment 2.1, tell you that entrance fees must be capitalized. So I am not going to take into account entrance fees at all. Right. My next item in my statement of income and expenditure, I must account for bank charges. Under my expenses, I will have bank charges, and the bank charges amount is the amount of $160. My next expense, donations received, and donations received will be under your income. Okay, under your income, you will have donations received, and your donations received 19,300. There was no adjustment there. Next item in my list is that there was repairs. Under your expenses, you will show the amount of repairs. There's no adjustment there for repairs, and the amount for repairs is 400 Rand. Next adjustment, next item there is the amount of wages. Remember wages, there was an adjustment. 12,400 was paid during the course of the year, but in one of our adjustments, you'll recall that there was an amount of 1,500 Rand that was not paid for wages, and our wages amount must now reflect 13,900, an expense of 13,900. Your next expense, next item in your list of accounts there, guys, will be our rent expense. Once again, there's an adjustment involved here with rent expense, guys. Rent expense, we had the 5,000 that was paid out according to our list of accounts. But remember, we have established that there was 1,000 Rand of accrued expenses that we did not pay. And our rent expense, therefore, is the amount of 1,000 Rand. The next account that we will deal with is our tennis balls. Remember earlier that one student has asked a question here on the tennis balls. The tennis balls expense will be, we started the year with 2,500. We bought more of 900. We've still got 960 of tennis balls on hand. Show the calculations there, guys. And your tennis balls expense after taking all that into account is the amount of 2,440. That is your tennis balls expense for the year. Your next account there, guys, is interest on loan. Now, just remember now, guys, with the interest on loan, if this had to be a sole trader in terms of the format, interest on loans appears under finance costs. But when we speak about the income and expenditure statement, income and expenditure, we are just focusing on income and expenses. In a sole trader, when we did the books of a retail organization, there we spoke about, as you guys can recall, there was revenue minus cost of sales, giving you your gross profit. You had to add your other income, subtract your distribution, administrative and other expenses, and also subtract your finance costs. But in a non-profitable organization, we will just have income and expenses. Let us focus, guys, quickly on the interest on loan. According to the list of accounts, you have paid 640. The adjustment tells you, remember we worked this out, there was still an amount of 320 Rand outstanding, and your amount for interest on loan, your interest on loan expense for the year is 960 Rand. Interest on loan, 960. Then also, guys, in your list of accounts, our next expense that we will deal with here, next account, there is affiliation fee. Affiliation fee. Affiliation fee, guys, is the expense there is 360 Rand. The next one is our honorarium. Remember in the notes, I've explained to you what is affiliation and what is honorarium. As far as you is concerned, guys, for exam purposes, you must just remember that those items are both expenses. Affiliation fee is an expense, honorarium is an expense. In my list of accounts, guys, I'm just going down my list of accounts. In my list of accounts, my next account that I will deal with is my account interest on fixed deposit. And interest on fixed deposit is an income for my interest on fixed deposit. Remember, there was an adjustment also involved with interest on fixed deposit. We have received an amount of 2,000 Rand already during the course of the year, but we have established that there was accrued income of 1,000 Rand, and your interest on fixed deposit, you will reflect income then of 3,000 Rand. Interest on fixed deposit, 3,000. Next item, guys, I'm just going down the list of my accounts as it is after I have now updated my trial balance. So my next account that I will deal with is my account called stationery. My stationery expense is the amount of 1,000 Rand. There was no adjustment on that one. It will remain as is. My next account is membership fees. We dealt with that already. Refreshments is our next items. We dealt with all of that. And back to my list of accounts where you show your workings. Remember, there's still depreciation that you must account for. So you bring into account now your expense for depreciation. You will show that calculation that I've indicated to you guys earlier. You will show that calculation there. And your depreciation expense then for the year, remember we have calculated an amount of 3,092. 3,092. That was our depreciation expense. So guys, as far as our income and expenditure statement is concerned, we have now accounted for all our income. So we will just block those amounts quickly. We have also accounted for all our expenses. You block your amount of expenses. You add up now, guys, all your income. Your income is now the 18,940 plus the 3,060 plus the 19,300 plus the 3,000. And I get income now of 44,300. I go down to all my expenses. I've got 200 Rand of membership fees written off, 160 Rand of my bank charges. My repairs was 400 Rand. My wages is now the new amount of 13,900. Rent expense has now been adjusted to 6,000 Rand. My tennis balls is now 2,440. My interest on loan is now 960 Rand. Affiliation fee of 360 Rand. Honorarium of 3,500 Rand. My stationery of 1,000 Rand. My depreciation expense now of 3,092. And my expense now, guys, total expenses. You add that up, you will get 32,012. 32,012. Just want to make sure whether that is correct. 30,900 plus 6,000 plus 2,440 plus the amount of 960 plus 360 plus 4,500 plus 392. 32,012. My answer here, guys, take your income of 44,300 minus your 32,012, and that will give you an amount of 12,288. It is a positive amount, and because that amount is now positive, you will now label that as the net surplus for the year. The net surplus for the year, and the net surplus for the year is 12,288, which is the difference between your receipts or your income and your expenses. If your expenses had exceeded your income, your answer would have been a negative amount, and your label would have been net deficit for the year. Okay, so at the end of the financial year, guys, you will take a look at all your income, all your expenses, and the difference between the two then will then be, in this case now, the surplus for the year. But guys, that will take care then of that question. I have now completed for you a question, guys, on the non-profit organizations here, guys. And we have completed the membership fee account. I've explained to you the membership fee account, the adjustments. Remember the steps that you must follow in completing your membership fee account. Remember, first you do your reversals, then you take a look at the amount that has been received for the year, bring into account the 3 adjustments at the end of the year, and then you close off your membership fee account to the income and expenditure account, which is the balancing figure, and that is then also the income for membership fees that will be transferred to your income and expenditure statement. Then, guys, I have also explained to you guys what will happen in the case of our funds statement, like the refreshments or a bar or a tuck shop, where you must calculate what is the profit on those items, which will then be just the revenue minus your cost of sales. And then I have also showed you how to do an income and expenditure statement. We will calculate, you will list all your income, all your expenses, and the difference between the two. The difference between income and your expenses is then your surplus. And should you have made, if your expenses now has exceeded your income, it would have been called a deficit for the year. Right, guys, I can entertain questions now.
So, do the NGOs not have to pay VAT?
No, it is not a VAT entity. Okay, so we are not going to bring into account any aspects of any VAT.
So if the question says it's a VAT entity, then we need to work out a VAT control account and add it to the list of expenses?
No, remember now the VAT control. If you want to bring into account VAT now, then the VAT will be either classified as an asset or a liability. VAT control can have a credit balance, which means that you owe SARS money, and that is a liability. And in the end of whereby SARS is owing you money, then your VAT control account will have a debit balance, and then it will be shown as part of our current assets in the statement of financial position.
Thank you.
For all purposes, guys, Colleen, don't get bogged down by the VAT and all of that stuff. You are not going to get any VAT on a question on non-profitable organizations. All right.
Thank you.
Okay, next question.
Sir?
Okay, I'm listening.
Yeah, I think we'll need to go back up to, I think it was on the first page, the membership fees account. There's that table there on the accrued income that is on the credit side. Can you just explain to me that last accrued income there?
Okay, there are 2 accrued incomes, eh?
Yeah.
Which one are you referring to?
I'm referring to the one on the credit side, the one at the bottom.
The one at the bottom.
Yeah.
Okay.
Yeah, that one.
This accrued income is the accrued income at the end of the financial year.
Okay.
So if you must account for accrued income at the end of the financial year, you say at the end of the financial year, accrued income is money that is still due to you.
Okay.
Therefore, accrued income is an asset. To record this in the books of the business, you will debit accrued income and credit your membership fee account. So the membership fee account will have a credit entry for accrued income.
Okay. Now it's clear, sir. Thank you.
All clear?
Yeah. Thank you very much.
Okay, guys. Any other questions?
Morning, sir.
Good day to you.
I just wanted to know if there were do we get to have prepayments in the membership fee?
Prepayments?
Yes.
Okay. Membership fee is an income to the business. Are you okay?
Yes.
Therefore, you can only get accrued income or income received in advance. When we talk about prepayments, then we are referring to expenses. And the membership fee account is an income account. The adjustments that impact on income accounts can only be income received in advance or accrued income. Clear?
Thank you, sir.
Rutendo, will that make sense, Rutendo?
Yes, thank you.
The confusion, Rutendo, comes in whereby many people regard prepayments. Prepayments, they see it as they have paid in advance. But remember, we are doing the books from the point of view of the business, from the club's point of view. And from the club's point of view, prepayments, if you want to attach it to income accounts, is that the members has paid in advance. We, the business, we, the club, we receive, therefore it is called income received in advance. When we talk about prepayments, we are actually only referring to prepaid expenses. All right, guys, any other thing, any other questions?
Sorry, sir.
I'm listening.
I just wanted to ask a question with regards to the rent expense, right? There was rent expense
Yeah.
of 5,000 and you added an additional 1,000. Now I understand that the rent is 500 Rand. Why was it that we added it twice there? If you could maybe just elaborate. Maybe I missed the part.
Okay. Just go to your adjustment on the rental. The rental is 500 Rand per month.
All right.
500 Rand per month, multiply by 12. You should have 12 months in your year.
Right.
500 times 12 is 6,000 Rand. That is
All
what
right.
you are supposed to pay. You have paid only 5,000 Rand. So you still owe another 1,000 Rand. And that 1,000 Rand is called accrued expenses. So to calculate your rent expense for the year, 5,000 plus another 1,000.
All right, no problem. Thank you, sir.
All clear? Okay, Clayton.
Hi.
Thank you, sir.
Okay.
Hi, sir. Sir,
Yes, Francis.
I want to know if there's any information that you know about for the exam format, because each...
No, definitely. Definitely not. Okay,
so multiple choice or yeah.
Okay, no, I can give you a hint. Eh? You must just know all the study units from 1 to 17. That's a tip.
Thank you.
It's not multiple choice, by the way. It's not multiple choice, guys.
Okay, we don't know, guys. You just go in there and you just prepare yourself on anything. Okay. Any other questions, guys?
Hi, sir. Is it possible to take to go through? Hold on, quickly. To take. Sorry for my poor communication now. The accumulated fund calculation.
Accumulated fund.
Yeah.
Okay.
That
Yes,
account.
okay. Okay. I will do that now for you. Can we just go back to that question that we dealt with now? Just to answer that question from, I think it's Jacqueline.
Yes, sir.
Okay. If the question had to ask you, do the statement of financial position. So in your statement of financial position, you will have under equity, you will have your accumulated fund. Remember, your accumulated fund can also be called your capital fund. In your accumulated fund, in the question, there was an opening balance of 8,160. Plus, under additional information under 2.1, they tell you that the entrance fees must be capitalized. Your entrance fees is the amount of 1,500 that will increase your accumulated fund. And at the end of the year, we have made a surplus, and our surplus was the amount of 12,288. If the question had to ask you, do the statement of financial position under equity, you would have had accumulated fund 8,160 plus the 1,500 plus the 12,288, and your accumulated fund in this question has got a balance of 21,948. Jacqueline, will that answer the question?
Yes, sir. Thank you.
Okay.
Sorry, sir. Does donations not fall part of the accumulated fund?
No, donations is an income, and therefore it appears under your income and expenditure statement.
Oh, okay. Then yeah. Okay, understood.
Okay, Jacqueline, just hang in there.
Okay.
If you have got an adjustment telling you that donations must be regarded as an equity, then you will transfer it then as part of your capital fund or your accumulated fund. But in this case, there was no indication to us what must happen with donations, and therefore donations is treated as income. Okay.
Okay, understood, sir. Thank you.
Right. Okay. Mr. Jones.
I'm okay, thank you, sir.
Oh, okay. I thought you've got a question. I see your mic is on, eh? Okay, thank you. Right, guys, that will conclude. Oh, is there another one?
Yes, sir, please. I wanted to know whether if entrance fee that was capitalized, if it wasn't capitalized, should we have included it in income and expenditure statement?
Under your income, yes.
If it was not capitalized.
If it was not capitalized, you will transfer entrance fees under your income. Transfer it then under your income, and under your income, you would have had then entrance fees 1,500.
Okay, thank you very much.
Okay, anything else? Right, guys, that will conclude my discussion with you guys for today. And this is also, like I indicated to you guys, this is also my last session with you guys. At this stage, guys, I want to wish you well then for the exams. I'm sure it will go well with you guys. Just work through, guys, all the stuff that we've done in class, as well as in these notes. Prepare yourself well. Know all your formats, guys. Make sure that you are that your calculator is working, that you are not scrambling, and you want to figure out how your calculator is working. Okay, prepare yourself, guys. Make sure that you know that you must download the question paper, complete it, and you must upload it again, and you must then forward it. You've got a time limit, guys. Please just go through the rules and regulations of these online exams. And like I said earlier, I wish you guys well. And I will appreciate it, guys, if you can just complete the feedback form, guys, and send that back to us. Okay, guys, that's the end of my discussion then with you guys. Good luck and enjoy the rest of the day. Bye.
Thank you, sir.
Thank you, sir.
Okay, pleasure.
Thank you, sir.
Okay.
Thank you, sir.
Thank you, sir.
Pleasure.
Bye.
Bye-bye. Enjoy.
Bye-bye.
Thank you.
Okay.
Thank you there.
Oh, okay. Nice song there.